My name is Phil Capriotti Sr., and I am the CEO and CFO of Empower Wealth and Tax. We started this company back in 2005. Originally, when I started it, the idea that I had was to help us baby boomers reach a 0% tax bracket in retirement. As an accountant and a recovering CPA, I haven't done a tax return in actually about a decade or so. Of course, we do have our own tax practice and our own CPAs here. But at any rate, what we wanted to do was implement tax planning and retirement planning and investment planning together. So today is going to be a segment, number one segment, and where does it all start? It all starts, folks, with maximizing your Social Security benefits. It's extremely important that you get as much out of your Social Security, and if you're married, your spouse receive as much out of Social Security because of all of the decades you've spent paying into Social Security. So sit down, relax, get yourself a cold beverage or a warm beverage, either one, and let's go ahead and get started. One of the benefits of maximizing your Social Security, you have to understand Social Security is the foundation of your retirement income plan. For those of us who have been paying into Social Security for the last 30, 40, and some of us 50 years, we've paid a lot of money into Social Security. We hear a lot of drama and a lot of naysaying with respect to file your Social Security early. The scare tactic. It's going to go bankrupt. Another scare tactic. The fact of the matter is, like any good accountant or CPA, you truly must run the numbers. The first thing I'd like to start with is, believe it or not, a major college university, actually an Ivy League university, won't mention the name, ran a study, and they wanted to know how many folks or what percentage of folks and how much time folks spend on actually structuring their Social Security strategy, claiming strategy we're referring to. And what they found after going through, and I understand it was a population of about 5,000 people that they tested. Most of them, over 90% of them, close to 93% of them, spent more time planning their yearly vacation than they did planning their Social Security maximization strategy. I was, number one, amazed, and number two, appalled. So we decided to do a client and personal outreach to teach you folks exactly how important it is. First of all, you have to understand that Social Security at the very maximum is only taxable at the rate of 85% of the benefit you receive. So when we structure a tax-efficient retirement income plan for any client, the first thing that we want to do is we want to start at the foundation. The foundation of your comprehensive retirement income plan that's tax-efficient is Social Security. Now, if you were born 1954 or before, your full retirement age is age 66. Now, from age 54 through age, and again, born in age 1954 and born in 1960, it starts to graduate up by 2-month increments. What I mean by that is if you were born in 1955, your full retirement age would be 66 and 2 months. If you were born in 57, it would be 66 and 4 months, and so forth. If you were born after 1960, your full retirement age is all the way up to age 67. So we're going to take this one example, and we're going to talk about an individual that was born 1954 or up to 1960. There are a couple variables we want to look at once we've loaded all of your earnings statements each year into the report. And by the way, they count zeros. Only the top 35 earnings years go into calculating what your Social Security benefit will be once you reach full retirement age. So once we have that calculation, now we know what your Social Security check is going to be at full retirement. If you file before your full retirement age, and again, let's assume for a moment your full retirement age is 1954, Your full retirement age is 66. If you file prior to 66, let's assume you filed at 62, you will receive 75 cents on the dollar, or 75% of what your primary insurance amount is. And as we said prior to this, your primary insurance amount is that amount of Social Security benefit you'll receive at full retirement age. This is called the actuarial reduction. So from 62, you receive 75%, or a reduction of 25% of your check. If you file at 63, you get 80% of your Social Security benefit. If you file at 64, you get 86 2/3% of your benefit. If you file at 65, you get 93 1/3. And if you filed at 66, you receive 100% of your Social Security benefit. Well, you're getting 100% of what you paid into Social Security by waiting. Now, what makes this extremely important is each year we receive a cost of living adjustment, or a COLA. A COLA adjustment is something, and over the last 20 years, folks, that COLA adjustment has averaged over 2.23% per year. The larger your Social Security check is, the larger your cost of living adjustment is going to be. In the prior explanation, we talked about what your actuarial reduction is. Now let's talk about the other side, building actuarial credits. If you wait and delay after full retirement age, for each year you delay, you build an additional 8% of your Social Security benefit, plus the corresponding COLA for that year. So that means if you were born in 1954 up to 1960 and you filed at 67, you receive 108% of your Social Security benefit, or primary insurance amount. If you wait to 68, you get 116%. 69, 124%, and at 70, you get 132%. You've taken that Social Security benefit, and not only are you getting 100% of what you paid into it, but an extra 33 or 32% on top of it, plus the corresponding COLAs for that year. It's simply amazing. Now, understanding the more you get from Social Security, the less you have to take from other investment assets to achieve your goal retirement income. And remember, current tax law, up to 85% of your Social Security benefit can be considered taxable income. But we want to get to the 0% tax bracket. We don't want any of our Social Security to become taxable. So how does that work? That's based on what's called the provisional income formula. I love it. This provisional income formula was started back about 30 years ago. It was actually started back in the 1980s, so that's 40 years ago. My, how the time goes by. And this was started by President Reagan and Tip O'Neill. So this is back in 1984 through 1986. So the way the provisional income formula works, and let's take if you're married, filing joint. If you're married filing joint, and you keep your provisional income, not your income, your provisional income under $24,000, none of your Social Security benefit is taxable. If it falls between $24,000, the lower bracket, and $34,000 or $32,000, only 50% of your Social Security is taxable. In addition to that, if it goes over $44,000, any dollar amount over $44,000, you add an extra 35% of your Social Security is taxable. We'll actually run case studies in our online workshops, or if you live in the Texas area, Horseshoe Bay, Cedar Park, Georgetown, Sun City, come to one of our library workshops, and we'll be glad to help you with that. Or just write into inform@empoweringretirement.com, and we'll be happy to structure your Social Security report. So what is the key? Well, the key to a tax-free retirement income plan is to get the most out of Social Security, because only half of your Social Security benefit goes into the provisional income formula. All of your IRA dollars go in there. None of your Roth IRA dollars go in there. So one of the things that we do with many folks is we'll do Roth conversions. Literally, for many folks, we can have folks receiving, those of us who are baby boomers, only half of your Social Security goes into the provisional income formula. Let's assume you're receiving $65,000 or $66,000 in Social Security. Well, half of that goes into the provisional income formula, $33,000. And now if I have a Roth IRA, as let's say I've been contributing to my Roth 401k, or I've been doing Roth conversions, either Roth contributions or Roth conversions. Let's assume I have a goal retirement income of $120,000, and I'm sick and tired of paying taxes because I believe, like Philip Donato Capriotti Sr. does, that anybody that's paid taxes for 50 years, and especially if they've raised taxpayers, thank God I've had 5 children who are all also taxpayers, I think we've done our fair share. So let's say you want to structure not giving back any money in taxes because you want to retire tax efficiently or tax-free. Literally, if we take half of your Social Security, we take the balance from a Roth distribution, we can literally structure a plan where you receive $90,000 a year, $100,000 a year, $120,000 a year. So I've done plans up to $150,000 a year where none of my Social Security or none of our clients' Social Security were taxable. And not only that, they retired in a tax-free benefit. Remember, folks, originally when Social Security was implemented back with FDR, Social Security was supposed to be tax-free. But then in 1984, 1986, President Reagan and Tip O'Neill, back when the Republicans and Democrats used to agree and talk with each other civilly every now and again, they wanted to balance the budget. So that's when they came up with this provisional income formula. And at that time, they passed a law that up to a maximum of 50% of your Social Security would be considered taxable income. Then when President Clinton got elected, he upped the ante. At that point, they made up to 85% of your Social Security was considered taxable income. There's some talk that they want to make up to 100% of your Social Security taxable income because you need to pay your so-called fair share. But the fact of the matter is, with proper retirement income planning, with structuring a tax-efficient Social Security maximization report, we can help you achieve a 0% tax bracket in retirement. So don't forget, call today, write in, inform@empoweringretirement.com. That is inform@empoweringretirement.com. We have been helping clients and friends reach a 0% tax bracket in retirement for the last 17 years. So don't be left behind. Don't be one of those folks that spends more time planning their annual vacation than they do their Social Security claiming strategy. Give us a call today. Let us help out. We love giving back to the community. God bless, stay well, and thanks for listening.